Hello and welcome to yet another episode of Asian Tigers. My guest today on the show is Rana Gupta. He's Managing Director, India Equities at Manulife Asset Management. Rana, thank you very much for joining in today. How does it feel at the end of what has been a really good 3 months? Do you think valuations are justified right now?
The valuations, if you look at it, on the face of it, looks on a bit expensive side. But then you have to look at the potential to deliver growth. And we are very bullish on the growth that is possible, primarily because the starting point is quite low. After a long time, under a very stable political environment, we see reforms happening which will have far-reaching impact. So therefore, the growth potential of this market over medium to longer term good is very good. So therefore, although the valuation looks a bit on the fair side, but we would pay up for growth.
When is the starting point of that growth? I mean, I speak not about GDP growth, but earnings growth. Last 2-3 years have not been great. Every year we think this is going to be the year of 15% plus.
Right.
Are you optimistic that the tide turns with this current year?
It should. It should turn in current year. In fact, if you look at the global environment, is quite supportive. If you look at the global profits since 2016 mid, they have been growing. Now, when we look at India, we must also highlight, if you look at Nifty, about 40% of Nifty's profits are linked to global profits.
Sure.
That should do well. Now come to the domestic part of it. Now, in domestic part, because of the large banks, and they have been facing a lot of NPL issues, the profits have been subdued. But hopefully by end of this, when this quarter results come out, hopefully most of the resolution issues at least will be behind us. And 2008...
Or even the corporate lenders? You think banks like Axis and ICICI will draw a line at the end of this quarter?
It's quite possible that they recognize those NPLs. So therefore, we would not expect slippages to go from here. It's already very high, the stock of NPLs. However, what might not happen is that recovery and upgradation may not happen. That is probably to us more like FY19. But in the meanwhile, there are certain pockets of the markets where we are very optimistic that those can take over. And I can talk about a few.
Sure.
For example, one of these reforms this government is pursuing, the end result is formalization of the economy. And I think the most large impact you are seeing in the financial savings part. So the financial savings is going up. As a result, a lot of bank deposits are flowing into the mid-sized banks. Now, mid-sized banks will have lower cost of deposits. They don't have legacy issues, so they can grow the loan book aggressively, particularly when the large banks are struggling. So that is one spot where we think earning can grow.
Let me stop you there. Mid-sized private banks?
Mid-sized private banks.
Not public sector banks?
No, that's right. Mid-sized private banks.
So the DCB, RBL, Federal Bank, those kind of banks?
We're looking at slightly bigger mid-sized private banks. Okay. Because of compliance reasons, I won't be able to name any banks, but slightly bigger than those mid-sized private banks. Okay. That's right.
Okay.
The second segment where we think, although it's not may not be part of Nifty as yet, but where we think earning can grow quite strongly, a lot of money is flowing to bank deposits. But if you look at the delta, most of the money is flowing in mutual funds and insurance. So we are very bullish on wealth managers, asset managers, some of the select brokers and insurance companies.
Okay. We
do think the earning will recover very strongly there. The third opportunity is in formalization, like certain sectors like jewelry, apparel, plastics, where the informal sector is very large and very fragmented. Because of this formalization initiative, including GST, we do see the listed corporates which are already organized. They will have a heads up. They will not only gain with the market, but they also gain market share. And of course, last but not the least, this came out recently on this new circular on affordable housing. Now, of course, we see how we need to wait and see how much government really allocates to those schemes. But potentially, it could be a game changer. Because real estate is about 10% of GDP, and real estate was not moving. That was one of the main reasons why capital formation, the capex cycle was down. But if this scheme is expanded, government allocates more, this can set off a construction cycle, and the construction value chain you can then play. And you can also play housing finance companies, you can play construction companies, cement companies. You can also play select real estate companies with good balance sheet who can potentially benefit from this.
What about housing materials like ceramics or, these kind of names, or plywood?
Absolutely.
Paints?
Absolutely. You can absolutely play those segments. In fact, those segments will have twin benefits. If this scheme really takes off, which we think it will, not only the demand side gets a boost, but particularly ceramics, plastics, cables, wires, light electricals, they will also, in these sectors, there are also a lot of informal businesses are there, which we think may have a tough time during the GST, at least transition-wise. So the organized company, the listed companies in the sector will benefit from not just the market growth, but also they will benefit from market share growth.
Correct. Do you see GST as an opportunity? Do you think it will throw up opportunities in these pockets?
Absolutely.
In terms of even aberrations, temporary aberrations?
It could, because GST, frankly, we don't know the rates, what the rate's going to be, right? So depending on what rates, what is classified, what is expected in the market, we do expect there can be short-term aberrations. Also, there could be certain destocking, restocking, depending on where the rates are classified. So there could be short-term opportunity. Our view is that GST, if you take a set a medium to longer term view, 6-9 months view, is a big positive. So therefore, we would just probably ignore those short-term noises that may happen.
Okay, so these are two big clusters. One is organized to unorganized. One is basically the financial inclusion space.
That's right.
Any other major theme?
And also construction related to housing and the finance of that.
Fair enough. Any other theme in India which you can play with some degree of certainty?
Sure. The other theme, so these are the themes which are incrementally more positive on. Yeah. The other theme which we have always been playing in India is about aspirational consumption. And with rising income levels, rising middle class, that's the most talked about, most known story. But that story still remains intact. So therefore, if you look at something like a passenger car penetration in India, still very low. White goods penetration, particularly air conditioners, washing machines, still very low. So this consumer discretionary part, where particularly we are looking at passenger cars and white goods, that is one segment we have been bullish, and we continue to be bullish, more so because of all these fundamentally positive things that those are happening.
What about the global plays, where you started off by saying they will contribute to earnings because of the global wave? But if you had to play between, say, commodity-related plays, IT and pharma,
sure,
and chemicals, let me say 4 different clusters, which ones would you be, in that pecking order, be more bullish?
So if you take a next 6 to 9 month view, one has to be more bullish on commodities. Because if you take a step back from what's happening in India and look at the Asia or the world, a lot of this reflection trades happening is due to China. In 2016, when the world was, 2016 quarter 1, when the world was not such a great place, I think it's China who stepped up the stimulus. And in this year, they have kept the world going by doing supply side reform. So therefore, commodity prices are inflating. And that will obviously reflect in the results of those companies who are listed in India. So that's number one. With respect to IT and pharma, frankly, in IT, we were bullish at certain lower levels. But since then, rupee has appreciated a lot. In fact, beyond our expectation, we were not thinking the rupee will be this strong so soon. So that will have some negative impact on IT as far as concerned. But still, IT is not expensive. There is certain level of value in IT. I don't think results will be blockbuster. But return-wise, they may underperform. Although they will give returns, but they might underperform the markets. Coming to pharma, that is where actually we are quite negative on the large cap pharma. Particularly the large cap pharma companies which are exposed to US, not just because of regulatory concerns. Those are there, those will be there, we cannot take a call on it. But if you take a look at US generic pricing, those have been under pressure. And that will reflect in all the numbers. This problem is compounded by these regulatory uncertainties. That said, I think within pharma there's a small space where there are certain pharmaceutical companies, predominantly mid-cap companies, who are exposed to India as well as other emerging markets, where they sell branded generics. That space is still all right.
Okay. And chemicals, the last one?
The chemicals also part of the, I would look at it a part of the commodities value chain, and chemicals in particular where China has clamped down the most. So we do think we will see good earning accretion in that space as well.
Any other niche domestic spaces? Because I was looking at your portfolio and I saw rating agency, something like that which does not have a very large stock universe footprint, but can you identify some smaller spaces like that?
Sure. So I'll go back to the second thing that I mentioned, because when we look at, when we talk to our peers or investors, we do think that this theme is not as well recognized as it should be. And this is where we believe we also kind of differentiate ourselves. We mentioned that about financial savings growing, and that's going to bank deposit is more of a known story. Of course, the benefits we can still play out. But this savings is also going into mutual funds and insurance. So one needs to play the wealth management companies. One needs to play the asset management companies. Now, wealth and asset management companies are not, these are smaller companies with market cap of $2 billion thereabouts. They're not part of any index. The beauty about them is, let's say, think about a wealth management company. Maybe they have 100 RMs and maybe they have $10 billion under management. This $10 billion can be $20 billion with just 110 RMs. So look at the profit accretion that is possible. Right. Similarly, for asset management companies, maybe 10-member team managing $5 billion today. It can be $10 billion tomorrow. So those are the very exciting spaces. I think they are positively levered to our positive view on the market. And insurance. Because insurance, we think that in certain insurance companies, there could be potentially quite large upside to margins, particularly the ones who are selling more ULIP today. As they start diversifying the product mix, sell more protection-oriented policies, and we do think the market will mature to those extent, their margins can move quite substantially, thus powering their earnings. So I think that is one segment, a niche segment in the sense they're not very popular, they're not into any indexes or as such, but I think that segment going forward will do very well.
I have to ask you about telecom, because that most asset managers did not like to own for the last many years, but it's come back on the discussion table at least. How do you feel about it?
Well, telecom is one domestic sector where we continue to remain quite negative. Telecom at the end of the day, to us, I mean, I know that there is Bharti brand and Idea brand and Jio brand, right? But to us, it's a commodity. It's about who can produce how many minutes. So right now, there is a capacity war. Right? The new players are coming with a lot of minutes, and at the same time, your usage, of course, cannot grow that much. There was some hope in data, but the pricing has gone for a toss. So we see for telecom companies, there will be a lot of pricing pressure, and to keep good customer service, they have to keep investing. So we see falling margins, higher capex, resulting into lower ROE. And some of them may be good value according to some people, but we are predominantly growth investors. So that value do not excite us as much. We need to see a long runway to growth, where we can buy stocks and sit quietly for next 2 to 4 years. Telecom doesn't give us that comfort at this level. You don't think this current wave of consolidation will help in any way? It will help marginally, but capacity need to go out of the system. I'll give you an example. Think about aviation. That market was struggling big time. It took one player to shut down and go away. No takeover, no consolidation. Shut down and go away for the market to come back. So we need capacity going away. Because of the merger of A and B, the capacity is still A plus B. So people are not really walking away. So we need capacity going away for us to have a more constructive view on telecom. How do you feel about aviation, since you mentioned it? Oh, aviation is too hard for us actually, because if you do go through the when you try to predict financial of aviation company, they are so sensitive to utilization, oil prices, US dollar, that you can expect $1 earning and they can end up giving a minus 10 or plus 10. You won't even know. So I think it's good for people who can take that kind of volatility. We certainly cannot. We would rather like more businesses which are more predictable, where we have hang out the business, where we can predict the financials to a certain degree of accuracy. Airlines is just too volatile, the financials. As a thematic, it may be all right. Markets are consolidated. There are only few airlines now left. But the interim financials for us is just too volatile.